Welcome everybody to Sprague's Market Brief. It's February 17th, 2012. I'm Taylor Hudson, joined by Hugh McNaughton. Thanks for being with us this afternoon. First, want to start out, we got a lot of response back from our last commentary, and we realized that we're doing these charts every week or every update, and a lot of you have never seen these type of price charts before. So I'm going to do a Cliff Notes version real quick on how to read the charts in our presentations. I happen to like a chart style called candlestick charts. They basically dumb it down for me and make it real easy for me to see if the market was up or down on a given day. So I'm going to start with this chart here and basically point out that each individual bar, or what would be called a candlestick, represents one time period of trading. So this is a daily chart that I'm showing you here. And basically this, let's go way out here to the right, this red candlestick shows 1 day's trading activity. And the colors are important in candlestick charts. If you see a red candlestick, that means that the market settled lower on the day. If you see a blue candlestick, it means the market settled up on the day. Going further, if you see a big body on the candlestick, like I have here or over here, it means there was a large move on the day, up or down by quite a bit. If you go to a candlestick that has a very small body, like over here on the left, or maybe even up here on the right, very small bodies mean that the market didn't change a lot that day. Top of the candlestick is the high for the day. Bottom of the candlestick is the low. So if I go to over here to this first down day that I pointed out, you can see the bottom of the body is literally the bottom of the entire candlestick. That means that the market settled at the close at its low of the day. If I go over to this blue candlestick just a little to the left, you can see that the top of the blue body is just below the top of the entire candlestick. That means that the market settled up on the day, almost near its high. Not quite, but almost near its high. Basically, people look at these candlesticks and they look for the biggest thing that folks look for on these are where the market tried to move in a certain direction and then it failed to hold. So on this red candlestick I'm pointing out right here that happens to be the low for the entire chart, the market opened the day up here at 318.50, let's call it, traded all the way down to 317.70, but it wasn't able to close at that low price. The market moved back up and settled higher, closer to 318.20. On a reverse side, a day where the market really tried to go up and make a move higher but couldn't hold it, we come over here. And you see the high for this day was 319.60, but it actually settled closer to 319.20. So generally speaking, blue candlesticks mean up days, red candlesticks mean down days. If you see big bodies on the candle itself, it means there was a big move in the market. If I go to the next slide, I want to point out, I'm always talking about these moving averages. And moving averages can be very complex or they can be very simple. And we use relatively simple moving averages here. We just use moving averages that literally take the average of the last X number of time periods on the chart. So what I've graphed here is the 18-period moving average. When I took this chart snapshot, that moving average was just at 319. So if you took the closing prices of the last 18 candlesticks on this chart, they would average 319, and that's why that line is here. These lines are important because they represent support and resistance on the chart, with the next topic that I want to touch on briefly. So same chart here, but I want you guys to get a feel for resistance and support. When we say resistance on the chart, we're just simply pointing out levels that could potentially be difficult for the market to trade above or to get above. So this high left over on the chart from the day that the market went way up to 319.60 but couldn't hold it will stay with us for the next number of days And if the market were to rally up against that high, there's a good chance that the market wouldn't be able to get through it. Opposite that is support. So those are levels that the market may have difficulty going below. So this red candlestick chart, or candlestick where the market was way down but couldn't hold it, left a low right around 317.80 that would be considered support going forward. So we hope that this little tutorial gives you a little sense of what we're talking about every week. And please don't be shy to send us our questions or comments about the charts, and we can certainly talk to them. So let's get into really what happened this week. For the crude oil charts, Brent had another up week. We had a market brief done last Friday. At that time, Brent was trading just under $118. Wednesday, we went all the way up to 120. Yesterday, we breached 120 and closed right at 120. And today, we stayed around that 120 level. In fact, the last print on this chart was 119.55 that you see right here. So for Brent crude, the chart is battling a leftover resistance high of 120.40. That's left over all the way from last summer, August 1st, 2011. So continue to be bullish on Brent. If you go to WTI, the chart read there was even more playing catch-up, if you will, this week with the Brent chart. Back on the 10th, a week ago, we were trading under $100. We were trading at $99. And essentially all week this week, WTI has played catch-up with Brent and gone from 99 all the way up now to 103.53. That's going to run into resistance left over from that high on January 4th, 2012, 103.74. Those moving averages are underneath the price action, and as the market climbs, if it were to pull back one day, it would likely use these moving averages as places that it would take a pause or a rest or have a little tough time getting through. So with WTI up all week and Brent crude up all week, I'm curious to know, Hugh, what the heck's been going on in the news cycle? Anything new out there for us to discuss?
I think it's fairly straightforward. You got your Greece, you got your Iran. You got your Iran, you got your Greece. Put them together, you got a Gran or you got an Ireek. I'm not sure which one is more appropriate. But the fact is that those two elements, Greece obviously are the positive outlook of a final agreement on a bailout package, and Iran's continuing tensions issues are very supportive, and that's probably the reason why Brent settled up on the week again for the fourth straight week in a row, maybe even pulled back today because of profit taking. But unfortunately, from the standpoint of any overall price relief, it's not particularly in the cards. There is one good factor, one good element here, and that is the continuing evidence that U.S. economic recovery is on a solid footing. I mean, the report after report would seem to indicate that, a few glitches here and there. But particularly the drop in unemployment claims this week was really pretty good evidence that may have turned the corner on that. And that's, of course, again, also going to support the whole demand, petroleum demand going forward syndrome. So I think that's about it.
Great. Thanks, Hugh. Well, let's finish up before the holiday weekend here. On the RBOB chart, no relief at all for the bears. Unfortunately, we spent most of the week trying to get through that February 9th resistance at 301.62. Yesterday, we finally broke it, went all the way up to 305. Today, hit that high again. Tried to go lower, but really sort of an inside day of trading, and continued to look higher here on RBOB. So even though we're all going to have jobs, thanks to the unemployment report going down, we may not be able to fuel our vehicles. If we go over here to the number 2 chart, really, for the bears, this is their best hope. You've got number 2 going up marginally on the week, but really not being able to get through that November 14th high at 320.04. And we have moving average support now, the 9-day moving average support, just under the market at, call it 319 even. If we break that level, then we could see some pile-on selling. And the next logical stopping point would be the 18-day moving average, somewhere around 313. So with that, we wish everyone a fantastic holiday weekend, and we'll talk to you next week. Thank you very much.